All right, welcome to another deep dive. This time, we're tackling something that might sound kind of, well, dry at first glance.
Uh-oh, are we talking taxes?
Yep, we're diving headfirst into IRS Publication 524, the one all about the credit for the elderly or the disabled.
Oh, interesting. That one could be a bit of a head scratcher.
Exactly. But trust me, it's way more interesting than it sounds. We're going to figure out who this credit is really for.
Yeah, like beyond the obvious, right?
Exactly. And we'll break down how it works.
With all those lovely IRS formulas.
Oh, yeah, we're going to have some fun with those. And maybe, just maybe, we'll uncover some surprising stuff along the way.
There are always surprises lurking in those tax publications.
Right. Like, why does this credit even exist in the first place? What's the big idea behind it?
Well, it's about recognizing that for many folks, getting older or dealing with a disability can make it tough to work.
Ah, makes sense.
So this credit is one way the government tries to lend a hand, offer some financial relief.
So it's not just about handing out money, it's like acknowledging that some people need more support.
Exactly. It's a small piece of a much bigger picture.
Hmm. A piece of what?
The whole conversation about social responsibility and making sure things are fair economically for everyone.
Okay, I see what you mean. So who actually gets to claim this credit? When I skimmed the publication, I noticed it's not just for retirees.
Nope, not at all.
You can be younger than 65 and still maybe qualify.
Right. You don't need to be collecting Social Security to benefit. The credit is for folks who are either 65 and up,
Gotcha.
or those who are retired due to a permanent and total disability A&D who also have taxable disability income.
Okay, that's where it starts to get a little
Oh,
complicated.
yeah, the IRS is all about
Well,
definitions.
definitions.
So we're going to have to really unpack what they mean by those terms to figure out who's actually eligible.
Permanently and totally disabled sounds pretty serious. Does that mean you can't do N-way work at all? Like zero?
It's actually a bit more nuanced than that. The IRS uses this concept of substantial gainful activity.
Substantial what now?
It's their way of deciding whether you're truly unable to work in a way that, most people could.
So it's not just about being employed or unemployed, it's about the type of work you're able to do.
Exactly. And the publication actually gives some really interesting real-life examples.
Ooh, examples. I love examples.
Okay, so picture this. You've got a retired sales clerk who now spends their time babysitting full-time for minimum wage.
Okay, I'm following.
Even though it's different from their old job, the IRS would probably see that as substantial gainful activity.
Because they're earning a regular income?
Yep.
So they wouldn't get the credit.
Interesting.
Hmm.
What about, like, someone who volunteers a ton, say driving for a charity 20 hours a week?
Ah, that's a tricky one. Even if they're not getting paid, the IRS might consider it work.
Because people usually DO get paid for that kind of thing.
Right, so they might not qualify either. It gets complicated. Wow, so much more complex than I initially thought. Those examples are super helpful, though.
Glad to hear it.
What really jumped out at me were the examples of people who might still qualify even though they are working, at least a little.
Yeah, those are the really interesting cases.
Like there's that example of someone doing those like make work tasks at their old job, as a trial run.
Just to see if they can handle it, yeah.
Right. Since it's not really productive work, the IRS might be cool with that.
Yeah, they might be okay with that.
Or that example with someone helping out at their sister's motel a few hours each day, like doing dishes or answering phones.
Right, right.
Since it's flexible and not super demanding,
It might not disqualify them.
seems like the IRS is trying to look at the whole picture.
Absolutely, they're digging into the details. What kind of work? How often? How much are you actually earning?
So let's say someone under 65 thinks they fit that permanently and totally disabled definition.
Okay.
What about proof? Do they need, like, a doctor's note?
A doctor's statement is definitely a requirement, but the publication does say you might be able to use an older one.
From, like, years ago.
Yeah. If your condition is the same A&D, it's kept you from working.
Okay, so no guarantees there.
It's always best to check the latest guidelines.
Right, and maybe even talk to a tax pro.
Always good advice.
Okay, let's shift gears and talk income limits.
Those are a whole other can of worms.
They seem kind of, well, low. Like for someone filing single, it's only $17,500.
Yeah, you're not wrong. The limits are definitely on the lower end.
And here's the kicker, right? It's not just your taxable income that they're looking at.
Nope, got to factor in those non-taxable sources too. things like Social Security benefits.
So even if you're not exactly rolling in dough, those benefits could push you over the limit.
Exactly.
Okay, so we've covered age, disability, income limits, but how do you actually calculate this credit? How do you get from all those factors to an actual dollar amount?
Ah, the million-dollar question. The IRS, of course, has a very specific process laid out in the publication. 5 steps, to be exact.
5 steps. Okay, that does sound a little intimidating.
Maybe a little.
Maybe we should break it down, step by step, so our listeners can follow along and maybe do their own calculations.
Great idea. All right, so step 1, figuring out your initial amount.
Initial amount.
Okay, this depends on your filing status, and if you're under 65, how much taxable disability income you have.
Oh, okay, I'm taking notes.
So, for example, single filers, their starting point is $5,000. Married filing jointly, $7,500.
Okay.
But if you're under 65 and receiving disability income, that initial amount could be limited by how much disability income you're getting.
Right, so those factors come into play right away.
Exactly. On to step 2. This one's all about adding up any non-taxable pensions or benefits you receive during the year.
Like what?
Things like, non-taxable Social Security payments, certain VA benefits, and any other non-taxable pensions or annuities.
So income that the IRS doesn't touch?
Yep, that's the key.
Got it. Step 3.
Now we got to calculate something called your excess adjusted gross income.
Excess adjusted, huh?
Basically, you take your adjusted gross income from your tax return, right?
Okay.
Subtract a specific amount based on your filing status.
Like a standard deduction kind of thing.
It's a little different, but yeah, similar concept. So for single filers, it's $7,500. For married filing jointly, $10,000.
Okay, I'm following.
And then you divide that whole thing by 2.
Interesting.
So they're considering your overall income, but giving you some wiggle room based on your filing status.
Gotcha. What happens in step 4?
This one's simple. Just add the total from step 2.
The non-taxable income.
Yep, to the result from step 3, your excess adjusted gross income.
All right, and that number, why is that so important?
That combined number helps determine if you can even claim the credit at all.
The suspense is killing me.
Right.
What's the final step, the grand finale?
This is where the magic happens. Take that combined total from step 4 and subtract it from your initial amount way back in step 1.
Okay.
If the result is 0 or less, no credit for you.
Bummer.
But if it's a positive number, you multiply that number by 15% and boom, that's your credit.
So after all those calculations, it all boils down to a simple percentage.
It does.
It definitely seems more complex than it looks at first glance.
It has its quirks, for sure.
But if you can navigate those twists and turns, knowing the rules could be a huge help to those who qualify.
Absolutely. And it really makes you think about how these tax rules actually affect people's lives.
It's not just numbers on a page, it's real money that could make a difference for folks.
Exactly. Speaking of real-life examples, the publication actually walks through a sample calculation.
Ooh, want to tackle it together.
Let's do it. It's always helpful to see these things in action.
Okay, so this example features a 66-year-old taxpayer filing jointly with their spouse.
Got it.
Spouse is 64 and not disabled. And their adjusted gross income is $14,630, with $3,200 coming from non-taxable Social Security benefits.
So walking through those 5 steps, their initial amount would be $5,000.
Yeah, because they're married filing jointly, but only one spouse is over 65.
Right. Then we add their $3,200 in Social Security benefits,
To their excess adjusted gross income.
which, if you crunch the numbers, comes out to $2,315.
Add those together and we get a total of $5,515.
And unfortunately, that's higher than their initial amount of $5,000.
So, no credit for them this time.
Sadly, no.
Bummer. But at least now they understand how the calculation works.
And so do our listeners. It's all about understanding the details and doing the math.
For sure. And speaking of details, we've covered a lot of ground here.
We have.
But I feel like we've only just scratched the surface.
Oh, there's so much more to explore.
Well, folks, stay tuned. We'll be back after a quick break to dive even deeper into the credit for the elderly or the disabled.
Can't wait. We've got more insights and things to consider coming your way.
We'll be right back. Welcome back. I don't know about you, but after all those calculations, my brain is, well, a little fried.
Yeah, those 5 steps can be a bit of a workout.
But you know what's really sticking with me?
What's that?
It's how this whole credit thing connects to, like, bigger questions about how we support people who might need a little extra help.
It's fascinating, isn't it?
Yeah.
It's not just a random tax break.
Right.
It really gets to the heart of what we value as a society?
Totally. Like, is this credit enough? Are there other ways we could be supporting the elderly and disabled? What are your thoughts on that?
That's a really great question. It's worth looking at how other countries handle this sort of thing.
Yeah.
Some countries have these really comprehensive social safety nets,
Like what?
things like universal basic income or guaranteed health care.
Oh, wow. Those are some big ideas.
Right, while others might focus more on providing accessible housing and transportation.
I hadn't thought about those approaches.
Yeah, it's really interesting to compare different systems.
Yeah.
It might give us some fresh ideas.
For sure. And it's not just about government programs, right?
No, not at all.
Communities, families, even employers can play a role in providing support.
Absolutely. It takes a village, as they say.
So true. Okay, let's zoom back in on the specific credit for a sec.
Okay.
What are some of the key takeaways you want our listeners to walk away with? What do they really need to remember?
Well, first and foremost, just remember, this credit exists. It might not be a ton of money,
Yeah,
but for some folks, it could make a real difference.
for sure.
Second, I think it's important to remember that tax policies aren't just about numbers.
Right.
They actually reflect what we value as a society, you know, what we prioritize.
That's a good point.
And finally, let's not forget that this credit is just one piece of the puzzle.
One piece of a much bigger picture.
Exactly. There are so many other ways we can support the elderly and disabled and build a more inclusive society.
I love that perspective.
Yeah.
We started with the nitty-gritty details of the tax code.
All those calculations.
And now we're having this broader discussion about social responsibility and support systems.
It's all connected, right?
It really is. It feels like this credit is like a tiny window into some really big questions.
It is, and that's what I love about these deep dives.
Me too. As I was reading through the publication, something that really caught my eye was this concept of sheltered employment.
Oh yeah, that's an interesting one.
It's basically work offered at certain places specifically for folks with disabilities.
Right, like workplaces that are certified by the Department of Labor, or hospitals,
Okay.
or homebound programs, even VA-sponsored homes.
It sounds like these places are set up to provide opportunities for people who might face, barriers in more traditional work settings.
Exactly. They create a supportive environment where people can work and contribute.
And what's really cool is that the IRS recognizes that the pay in sheltered employment is usually lower than in regular jobs.
It makes sense, right? Given the type of work and the support services that might be involved.
Totally. And because of that lower pay, the IRS doesn't just automatically assume that someone working in sheltered employment is capable of substantial gainful activity.
It's not a one-size-fits-all situation.
So even if you're working in a sheltered setting, you might still qualify for this credit. That's really important information for folks under 65 who are looking for work.
Absolutely. It shows that the IRS is trying to be, well, realistic and consider the individual's circumstances.
Yeah, not just applying a blanket rule to everyone.
I'm really impressed by how much thought went into designing this credit.
Me too. It's clear that it's not just about numbers. It's about trying to understand people's lives.
I couldn't agree more. And I think that's a really powerful takeaway for our listeners.
What do you mean?
Well, sometimes we get so caught up in the technicalities, the rules and regulations,
Oh, yeah, for sure.
that we forget about the actual people these things impact.
That's a really good point. I think that's a perfect segue into our final thoughts for this deep dive.
Okay, I like it.
We've explored all the ins and outs of this credit, but what we've really uncovered are some pretty profound questions about how we value and support different members of our society.
Yeah, like this credit exists because we, as a society, have decided that the elderly and disabled deserve some extra help.
Right.
But it also begs the question, is that enough? Are there other ways, maybe even better ways, to achieve those goals?
Those are the kinds of questions we want our listeners to ponder, to grapple with.
Yeah, long after this episode is over.
It's not about easy answers. It's about having these thoughtful discussions and challenging ourselves to imagine a better future.
Well said. And sometimes the most unexpected topics can be the spark that ignites those conversations.
Like a tax credit.
Exactly. It's all about finding those unexpected entry points into deeper issues.
And on that note, and we're back, ready to wrap up our exploration of this credit for the elderly or the disabled.
It's been quite the journey, hasn't it?
It really has. I feel like we've learned so much, not just about the credit itself,
Yeah, it's gone way beyond that.
but about aging and disability, and how we as a society can do better, be more inclusive.
It's amazing how a topic like taxes can lead to these broader conversations.
Right. So before we sign off, any final thoughts you want to share, any insights you want to leave our listeners with?
Let me see. I'd say Try to look past the numbers, past all the technical stuff, and think about the actual people this credit is meant to help.
The human side of it all?
Exactly. Who are they? What are their lives like? What challenges do they face? And how can we as individuals and as a society make a difference?
Love that. It's easy to get lost in the rules and regulations, but ultimately it's all about people.
Couldn't agree more. Sometimes the best way to really understand something like this is to, put yourself in their shoes.
Walk a mile in their shoes, right?
Exactly.
Well, I think that's perfect note to end on. We started by deciphering IRS language.
And now we're pondering the future of social support.
What a ride.
It's been a pleasure diving deep with you.
Likewise. And to our amazing listeners, thank you for joining us on this exploration. We encourage you to keep learning, keep questioning, and keep these conversations going. Until next time.